Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today, we'll be talking about the top market events to watch in the markets this week, with a key focus on the current gold rally. So far, gold is up about 29% year to date, and we'll be looking to see if or when we'll be having a new all-time high in gold. So we'll try to understand the current market dynamics and potential market movements for the rest of the week. So once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. So before we make any progress, I would like to start with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence and practice proper risk management. So good morning, Seva. Good morning, Robert Cavale. Good morning, Willibert. Thank you guys for joining. So let's get started. So we'll start by looking at the economic calendar. Of course, today is a boring Monday. We don't have much happening in the markets today. So starting with Sunday, we had quite a number of developments in the markets. One of them being Chinese inflation data. So the CPI in China came in at 0.4% year over year, which is below expectations of 0.6%. And of course, a drop from the previous reading, which was 0.6%. So producer price index, which is a measure of forward inflation, came in at negative 2.8%, meaning that manufacturers are basically selling products at lesser prices or lower prices. In this case, a big drop of negative 2.8% compared to the previous reading, which was negative 1.8%. And of course, the expectation was negative 2.5%. So as you can see from the graph here, the highest we have seen on Chinese PPI was around 13.6% in November 2021. Then that gradually dropped to zero and then below zero. And since then, we've been having numbers or figures below zero. So this indicates that prices in China are expected to continue dropping. Also, the consumer price index is expected to continue dropping overall. So we don't expect much of a price rally. And now the focus on China is majorly on the quantitative easing, or basically the money that the Chinese government is pumping into the economy to try and boost its growth and save the real estate sector, which has been ailing for the last 2 years. So this basically creates a necessary environment for quantitative easing, which will likely lead to a strong rally in Chinese equities. So going forward, for the rest of the day, we'll be having 3 major bank holidays. So the first one is in Japan in observance of Health Sports Day. Second one is in the US, where we will be looking at the Columbus Day. So Columbus Day is being celebrated today, so we don't expect much of activity from the US. And of course, US equities will be closed as well as futures markets. Then in Canada, we'll be experiencing the Thanksgiving Day, so also a bank holiday. So those are 3 major economies where we will not be having much of an activity today. So besides that, we'll be expecting new loans data from China. This will be important, especially for Chinese investors and traders. And the major event of the day will be 2 speeches from FOMC members. So the Federal Open Market Committee, which is the equivalent of the Monetary Policy Committee in Kenya, basically sits down 8 times a year to discuss US monetary policy and make decisions that literally impact every other global market. So whenever they make a decision on the US monetary policy, it may cause some good volatility. Of course, the next FOMC meeting will be happening on the 7th of November. That is 2 days after the US elections. So Since that's the expectation, we'll be following these two Fed members as they present their speeches today, despite there being a bank holiday, which could lead to some strong market activity, especially at the New York Open. So the first speech will be at 4 p.m. from FOMC member Kashkari. This is the member from Minneapolis. Then the next speech will be at 10 p.m. from FOMC member Waller. So those are the two main events happening for the day, and they could bring in some much needed volatility despite there being bank holidays. So going on for the rest of the week, we'll be having quite a number of data points. So from the jobs reports side, we'll be getting two job reports, one from the UK on Tuesday, and these will be at 9 a.m., showing the number of new jobs that were created in the UK economy, the average earnings index, as well as the unemployment rate. So we'll be getting quite a number of CPI reports, which are measures of inflation. So consumer price index for Canada will be coming up at 3:30 p.m. on Tuesday. Then we'll also be getting CPI from New Zealand. This should be at 12:45 a.m. on Wednesday. Then consumer price index for the UK, where overall we're expecting inflation to have dropped to 1.9% in the previous month. This should be at 9 a.m. on Wednesday. We should be getting our second jobs report from Australia on Thursday at 3:30 a.m. So this will show us the change in employment as well as the unemployment rate in Australia. We'll be getting the final core CPI for the Eurozone, which is expected to be at 2.7%. So nothing much of a change, it's just revisions. Then the main event of the week will be the ECB rate decision, where overall we're expecting at least a 25 basis point cut from the European Central Bank. So this should reduce the interest rate in the Eurozone from 3.65% to 3.40%. Then we'll be getting the retail sales data from the US at 3:30 p.m. on Thursday, which should be the main event for US dollar traders. So this is expected to bring in some much needed volatility in the US dollar pairs, and this should be on Thursday at 3:30 p.m. So we'll get monetary policy report hearings from the UK on Thursday. Of course, the weekly crude oil inventories at 6 p.m. on Thursday. We'll get Chinese GDP, industrial production, and retail sales data at 5 a.m. on Friday. We'll get more reports. This includes retail sales from the UK at 9 a.m. on Friday. Then, as we approach the end of the week, we'll be getting building permits, housing starts, as well as a speech from FOMC member Ola. This should be on Friday at 3:30 p.m. and the speech at 7:10 p.m. And of course, on the weekend, we'll get the Treasury currency report from the US. So that basically completes the week. So besides that, we'll be getting more data coming in from earnings. So from the earnings side, now that the earnings season is back, the main focus will be on Tuesday. Remember, today is Monday, so the stock market is basically closed. The bonds market is also closed as the Americans celebrate the Columbus Day, or what we rather call the Indigenous Peoples Day. So on Tuesday, we get the Bank of America earnings. So Wall Street is mostly upbeat towards Bank of America ahead of the financial giants' third quarter earnings report, due out ahead of Tuesday's open. Indeed, the consensus recommendation of the 24 analysts covering the Bank of America, tracked by SP 500 Global Market Intelligence, is a buy. So it's also important to note that Warren Buffett, who has been the biggest investor of Bank of America, has mainly been reducing his investments in the company. So in this case, it will be more of unveiling, basically showing the financial position of the bank, and perhaps we'll get answers as to why Warren Buffett has been reducing his position in Bank of America. So CFRA research analyst Kenneth Leon has a hold rating on the financial stock amid expectations that Bank of America will underperform compared to its peers. So The Bank of America's traditional consumer banking areas, credit card, auto, mortgage, and personal loans are slowing down, as seen in the first half of 2024, Leon says, adding that the big bank has realized no growth on loans and deposits for the last 2 quarters. So this will be a very important earnings report, worthy of following, to see if there will be any important opportunities to take. So among other companies that will be reporting on Tuesday is Charles Schwab. Will be getting Citigroup, Goldman Sachs, J&J or Johnson & Johnson, PNC, Progressive, State Street, United Health Group, and Walgreens Boots Alliance. So one of the key highlights that you might want to check into is United Health Group, which is a major part of the Dow Jones 30 index. So it could bring in some much needed volatility for the Dow Jones traders. So we'll be getting more companies reporting, and I'll try and focus on the main highlight of the week, which will be earnings from Netflix. So Netflix will be reporting at market close on Thursday. So of course, we should be seeing some much needed volatility, especially on the stock itself, but also on the Nasdaq 100 index. So we should be expecting to see some good volatility coming in from this one. So as we proceed, just give me a sec. So the other highlight of the day is, of course, the US elections, which is happening less than 30 days from today. So US elections are coming up on the 5th of November. And on this day, we should be expecting investors to be quite concerned. It's not yet clear who will win, whether it's Trump or whether it will be Kamala. However, 2 days from the election, that is on the 7th of November 2024, is when we will be getting the next Federal Reserve meeting. And in this case, we're expecting a 25 basis point cut. And so far, the market is pricing in the 25 basis point cut by 88.6% probability. So there's a high likelihood that the Fed will go for another rate cut, and this is expected to weaken the dollar further. So as this has been the theme of the year so far, all we have been seeing is the market pricing in most of these central bank decisions. So if you're waiting for the Fed to cut rates by 25 basis points so that you can start shorting the dollar, that has not been the best approach in the market so far. So what we have been experiencing this year is investors going ahead and front-running the Fed. So most likely we should be seeing the dollar index weakening ahead of the rate decision that will be happening on the 7th of November. So it's the same case for what we have seen with the euro. So we're expecting, yes, a 25 basis point cut. This will be happening on Thursday at 3:15 p.m. And if you're expecting the euro to be weakening on this specific date, then there's a good chance that the euro could be weakening ahead of time, and the market could have the exact opposite reaction during the announcement at 3:15 p.m. on Thursday. So that being said, we don't have much to expect in the market so far. So I believe at this point, we should jump straight into the market analysis. In this case, trying to understand the current market patterns and where the markets might be headed next. So I'm looking at the comment section. If you have any questions relating to the presentation, of course, feel free to type that and I'll be responding as we go. So good morning, Jason. I can see Violet in the house. Thank you for joining. Noniza Jack, good morning. Ken Moneki, thank you for joining. Philemon Koech, thank you for joining. Wangari Patrick, Dennis Mwangi, Boaz Chemueno, thank you and welcome back. John Mithamo, thank you for joining and happy trading week. So There's already a question on gold, so I'll be looking to answer that. So let's begin the technical analysis right away. So I'll be starting with the dollar index. The dollar index has been pretty bullish following the developments in the Middle East. So following what happened between Israel and Iran, we saw investors going for safe haven assets, in this case, including gold and the US dollar. And that led to a pretty strong rally from this bottom here. So in the last 2 weeks, we have seen the dollar rise 2.95% or almost 3%. So now, as we approach yet another definitive period, which is the US elections as well as the federal rate decision, we should be expecting to see a much weaker dollar, especially considering that the Fed is going for rate cuts. So for now, we're enjoying a strong rally in the dollar index, but at some point, we should be expecting to see some form of reversal. And you can already see that the momentum is dying out on the dollar index. So as pertaining to the topic of the day, which is gold, gold is already up 30% since the start of the year. So we started the year around this price level. This was around 2053. And now we are looking at 2659, which is 29.53%. And the all-time high in gold is about 30.8%, up from the first day of trading this year. So far, we have experienced several pullbacks. I would say the last 2 weeks have been more of a pullback, with the market making quite a strong rally towards the end of last week. And now we are facing a potential new all-time high. So one core theme that we have experienced in gold is that on one side, gold was beginning to form a channel where prices were moving back downwards. But then towards the end of last week, this is when we had the market making a very strong rally. And then on Friday, there was a clear breakout, and then the market pulled back downwards. And today, there was a successful retest of this trend line, and the market bounced and erased all the early morning losses. So this implies that there's a good likelihood that we could be seeing a new all-time high in gold at around 2684 after the familiar pattern played out here, which is more of a breakout followed by a retest of this area here, and now a continuation along the same trend. So normally, whenever you have a pattern such as this, where on average the market is moving this way, and then the market eventually makes a breakout, you expect the market to head right to the top of the pattern. So the top of the pattern is an all-time high at 2684. So after breakout, retest, and continuation, in this case, we should be expecting some further upside momentum in gold, touching at least 2684 this week. So now, concerning the dollar, remember gold is priced in dollars. If the rally continues, we should be expecting a new retest of this area and potentially an extension into another new all-time high. And this is based on the potential of the dollar beginning to weaken this week. So on Brent oil, we have seen quite a number of changes, with a big sell-off dropping to $68.5 per barrel. But then since then, this was the last month, we saw the market bouncing quite strongly. So on the forward chart, this is how the chart looks like. So it seems like the market is going for some form of recovery. So if I just clean my chart here and then we zoom out, this is what we have. So on the daily, there seems to be a very strong support around this area here. Then here we can see that there has been quite a trend line that has been holding as resistance. Then if you zoom in and you go to a smaller time frame, then you can see the kind of swings we have been experiencing in oil prices. And the most recent one is attempting to get to this trend line here. So going to an even smaller time frame, in this case, for our chart, you can see the overall price action for last week, where we had this as the extreme highest price and these as the extreme lowest price. And now as we start a new week, you can see that the closing price was almost the same as the opening price. So we are yet to see a definitive direction in oil prices. But one thing is clear, we opened the week with quite a strong gap. So this was the gap that we experienced at the market open today. So of course, the overall expectation is to at least see the market closing the gap. So potentially the market making a run for this area here, around $78.483 per barrel. So there's nothing much of an expectation in oil besides just closing this gap. And of course, the crude oil inventories later this week might provide a necessary direction in oil traders. So as for US equity indices, what we are seeing here is quite a strong rally in the in the Nasdaq 100 index. So after this big dip from this area here all the way down, we had a drop of about 17%. And this happened in the month of July. Since then, the market has rebounded quite strongly, and now we are headed for a new all-time high. So remember, the previous all-time high was at 20,759, and right now we are looking at the market retesting a previous high here, with the potential of a break happening today. So in this case, the key price level to observe for the Nasdaq is $20,315 per share. So in this case, if we happen to see a break, then that should lead to an extension of the rally. And of course, if you observe the current price action levels, then you are pretty clear of this. So this is I would call it an ascending triangle with a fixed resistance at around 20,315. So the key levels to watch is if the market breaks out of this resistance, which would lead to a strong rally to the higher side. So as for the US 30 or the Dow Jones, clearly we are looking at a new all-time high that just printed today. So yes, we had a new all-time high on Friday, but then today we are looking at a potential extension of the rally. So far, since it's a holiday, we are not seeing much of a price action here. So I would advise to track this range and wait for the eventual breakout. Since at these current price levels, we don't have much of an activity. So just track this range as the market trades sideways until there's that eventual breakout. So as for the SP500, this is what we are looking at, a new all-time high. Yes, we had an all-time high on Friday, but also today, it seems like the market is pushing for a new one. From the 4-hour chart, we had almost 3-week range where the market wasn't doing as much. So it was more of a sideways momentum, and we discussed this last week. And now we are seeing a breakout that happened last week and potentially an extension today. So clearly, the market had started the Asian session on the lower side. Right now, we have already reclaimed the losses and almost retesting the highest price that we saw on Friday. So in this case, a potential rally could emerge from around 5,822 price level. So as for Bitcoin, seems like today is Bitcoin day. We are not seeing much of a sell side momentum anymore. So we have been in this range for the last 6 months. I believe this is the last 7 months. So we haven't had much of strong directional movement on Bitcoin. So far within this range, this has been the overall price action direction. But now, noticing the trend and the sequence of moves from the upper to the lower trend line and so on, in the most recent price action activity, price didn't get to a new high on the upper trend line, but also on the pullback here, the market didn't quite get on the lower trend line. So now we are still pushing for the upper trend line here. So a potential push to this trend line might take us all the way to around $67,000 per Bitcoin. So from the 4-hour chart, this is how it looks like. And Monday seems to be quite a good day for Bitcoin today. So far, I would say we are up 2.92%, almost 3%. And of course, there's still more room for upside potential. So in this case, a target of around 66.5. So I expect some further momentum upwards, extending to this area of $66,500 per Bitcoin. So the Nikkei 225 index is making quite the rally. So having this flash crash that happened some time back, down about 28%, I would say the market has made quite an impressive recovery. So from this bottom all the way back up, we have had a rally of 31%. And now, today, we are looking at a major resistance level that the market has been unable to break. And this is since the 27th of September. And today, we are retesting that resistance again, which implies that there could be a potential rally above this price action level. So a key level to watch and be keen on. So as for currencies, if you look at the USD JPY currency pair, I believe now we are headed to the 150 price level. So if I clear my chart here, this is what we are looking at. The yen strengthening by over 10% against the dollar. In this case, 13.88%. But then immediately we have seen this reversal or the market recovering. And the main reason that this has been happening is because that Bank of Japan members decided that they are no longer going to continue hiking interest rates, which led to a change in direction in the USD and currency pair. So far, having met this resistance here, we have seen the market really struggle to break the area. This happened on last day. Then on Friday, the market rallied to the same level. And today being Monday, the market is attempting to break that resistance level, which points to a likely rally to another level. In this case, we are looking at a potential 150.859 price action level, even though we don't have much of activity due to the bank holidays happening today. So we should be on the lookout for a strong move towards 150.859. So as for pound USD, we have seen the pound yielding some ground to the dollar. This happened over the last couple of days. So from the forward chart, you can see that in the last 2 weeks, it was basically a sell-off. But now what we are seeing here is the market finding some form of support. So in this case, we are looking at this area here acting as the key level support. And there's a potential that the pound could be bouncing from here. So from the H1 chart, this is how it looks like. So it seems like the market is ranging along this channel. So just want to highlight it out. So along this channel, we haven't had much of a momentum. So if I zoom out, this is how it looks like. So we should be on the lookout for a potential breakout. This could play out any time. So notice that on Friday, the market didn't form a new low. So yes, the sequence here is the market forming lower lows as well as lower highs. On Friday, we didn't get a lower low. So in this case, on Monday, there's that potential that the market could eventually break out towards the upper side. Of course, the target goes to the top of the pattern. So we could be seeing a rally to 1.31338 happening this week. Of course, today being Monday and a slow day with public holidays across 3 different nations, we don't expect much of a price action activity, but it's always better to be prepared than not. So in this case, be ready for a potential rally in pound USD. So for Euro USD, we are seeing a very strong rejection of 1.120 price level. So since then, we have seen the euro just yielding ground to the dollar. And of course, noticing that on the economic calendar, we have that expectation of the ECB cutting rates by 25 basis points this week. Then there is that overall reaction that the market may have formed a double top. And for those who are not familiar with the double top, it's an M-shaped formation. So in this case, a rally to this area, then a drop back to the neckline, then another rally to the same area, and then back to the neckline, followed by a breakout towards the lower side. So in this case, after the double top formation, if you look at the daily time frame, this is how it looks like. So it's basically a rejection of that level, and the euro now proceeding to yield to the dollar, and we could be seeing some further downside potential in this pair with the next targets around this area here. So we could be seeing a drop to 1.07821 from the current price action level. So this should be a longer term outlook for perhaps at least for the week. So we should be seeing the Euro USD continuing to drop, especially after we anticipate that the ECB will be cutting rates later this week. So pound yen still struggling to break into a new high. So from the forward chart, this is how it looks like. So the market has been retesting this resistance for quite a period now. So over the last 3 weeks, it has tested once, twice, and thrice. And now this week, we are retesting the area again, which basically implies that there is a good likelihood that we could be seeing the end of this support area here, and eventually the market breaking above 195.584. So clearly, the area to observe is a breakout above this area here. That would signal a bullish side trade. So for the Asian pairs, AUD USD currently struggling here in what looks like a flag. So after the strong bearish momentum that we experienced about 3 weeks ago, now what we are seeing is the market now moving sideways. So from the 15 minutes chart, this is how it looks like. So we don't have much happening around this area here. So we should be awaiting a potential breakout to play out at some point in the week. So in this case, we just map out the areas and wait for the eventual break, which might be happening sooner than later. So the potential break could be happening either to the upside or to the downside. So we continue monitoring the chart to see what plays out. For now, I would say that the market is just ranging. So on the USD trading against the Swiss franc, this is what we are currently looking at. So let me clean up the chart. So from the forward chart, you can already see that we are out of this consolidation area here. I remember we discussed this a couple of weeks ago. So the market had been moving sideways. Eventually, we had a breakout towards the upper side. Yes, the market is struggling to make a strong rally, but the case for a bullish run in the dollar against the Swiss franc is still open. So from the 1 hour chart, what we are basically witnessing here is a sequence of higher lows, and then for the highs, we have had more of a permanent resistance around this area here. So the key level to observe would be if the market breaks towards the upper side outside this triangle. So this major resistance will be a key level test, and potentially we could be seeing a breakout here and the market heading higher. So for New Zealand USD, it's more of a range similar to AUD USD. So from what we have seen with AUD USD, it's the same thing. So market getting into this kind of range. And potentially, we should be seeing a breakout happening later in the week. So following the overall longer-term trend, there's also that potential that the market could break out towards the lower side. So a trade could potentially play out if the market breaks to the lower side and heads straight to this area here, around 0.60488, but it hasn't played out yet. So at this point, we should be expecting the market to remain within pattern. And within pattern, it means that there's that likelihood that it could bounce from here and head back towards the upper trend line. So the potential for a breakout is what we should be watching this week. And if it plays out, then we go for short selling positions towards this area here. So for USD CAD, it's a pretty straightforward direction. Very strong bullish momentum. Of course, the target is now on this area here, if and when the market breaks the current price action level. So a very, very strong bullish momentum. If you count the days from the first green candlestick to the current one, we are looking at 8 consecutive days where the dollar has been gaining against the Canadian dollar. And now we're expecting some further push upwards towards 1.38307. So from the 4-hour chart, this is how it looks like. 1-hour chart, this is how it looks like. And from the 15 minutes chart, this is how it looks like. So we are currently retesting the high of day, and a potential push higher might be playing out today. So that's it for the day. So I'll be checking the comment section to see if there's any questions, respond to the questions as we approach the end of the presentation. So first question from Boaz Chemueno. Hi, I would like to know your take on gold bull run to continue. Yes, I absolutely expect the bull run on gold to extend. So currently, from what we are seeing in gold, it's more likely that we will be seeing an extension of this. So think about it this way. Gold has been making big moves and then trading sideways for a while. So at this point, it spent like 4 weeks trading sideways before making a breakout and taking a stage around 25.89, and then extending the rally all the way up to 26.84. Then we went into a bearish market momentum for about 2 weeks, and now we are yet on another break. So another leg upwards perhaps might take us to 2700 for gold. So for now, the short-term price action momentum indicates a breakout retest continuation, which is more of a book setup that we have experienced time and time again. So there's that probability that the market could be headed for 26.84 price level. So another question, this is from Wangari Patrick. Is there a way we can tell exactly the time when China will be releasing the stimulus package? I mean, do we have a source we can get this info immediately it is released? So for Chinese quantitative easing or stimulus, we don't expect much from the economic calendar. So it's more of a surprise announcement. So that being said, I believe the best site to be tracking these is on Financial Juice. So try and use the financialjuicewebsite.com. It gives you timely updates whenever there is new developments in the market. So morning, Greg. Good morning, Fred. Another good question. Is it possible to trade US bonds, commodities, stocks at FXPesa? So at FXPesa, we have quite a number of assets available for trading. US bonds or treasuries are not one of them. However, for commodities, we have agricultural commodities such as cocoa, coffee, and other futures. We also have US stocks. So the top major stocks are available on the platform, and many other assets, including currencies, indices, and exchange traded funds, or what we call ETFs. So there's a request to comment on BTC. I already did that. So remember that the video is available on demand, so you can always rewatch if you missed something. So also a good question from Apollo. Comment on the relationship between BTC ETF and BTC price. Approval of BTC ETFs and halving were anticipated to trigger a price rally, which appears muted for some time now. So yes, I acknowledge we have been on a 7-month range in Bitcoin, but at some point we should be seeing a breakout. So remember, from technical price action history, we know that the longer market ranges, the bigger the breakout. So at some point, if we break out of this 7-month range, at some point, we should be seeing a very strong rally, and that's the real opportunity we have been waiting for. So kindly be patient on this one. So how China's intervention to revive its economy affects Australian dollar and New Zealand dollar pairs. So whenever there is good stuff happening to the Chinese economy, it usually strengthens the Asian pairs. That's in reference to Australian dollar and the New Zealand dollar pairs. So in most cases, when China is doing well, Australian dollar and New Zealand dollars also do well. So does the market price the FOMC rate cut this rally in anticipation? That is the rally down of the DXY. The FOMC rate cut is expected in a few days from now. This should be what? 24 days from today. So there's a good likelihood that the market will be pricing in that rate cut earlier than before. Earlier than expected. So in this case, there's an overall expectation that we should be seeing the dollar index weakening ahead of time. So there's a good likelihood that we will be seeing the dollar weakening against other currencies, perhaps this week or next week. So we keep observing the technicals to see if there's any evidence of that and then take the positions. So a good question. Hello, is there a difference between the US 100 and the NASDAQ December contract? Yes, there's a difference. So the US 100 is the spot index for the NASDAQ, and the December contract is the futures contract. So there's a difference between the cash index and the futures contract, but they tend to be very strongly correlated. So last question I'll be answering today is, what is the effect of Hurricane Milton on stock markets? Well, there was quite a big scare about the hurricane before it had happened, but now it seems like the market has already priced it in, so we don't expect much of a reaction from it. So far, I think the focus in the markets right now is on the US election, as well as the next Federal Reserve decision. And of course, the top event of the week will be the European Central Bank decision. And the 30th of this month, 30th of October, is when we'll be getting the UK budget released. So that also should be on your books as you prepare to trade the month and look for opportunities in the markets. So thank you very much, everyone. Thank you for your time. If you're watching this on YouTube, remember to like and subscribe. If you're watching this on Twitter, remember to share the video. You can share your comments, questions, and I'll be responding to them later. And on top of that, remember we have a new episode of the Bullish Manta podcast. It's available on YouTube as well as other podcast platforms. And if you are just beginning your trading journey, make sure to check out the Novice to Pro course, which is available on FX Pesa YouTube. It will help you transition from a beginner to a pro. And at the same time, if you are looking to register or start trading, check out the links in the description below. If you're watching this on X, make sure to visit the FX Pesa page for the links to register for a trading account. So thank you very much, everyone. Thank you for your time and participation. I wish you a happy trading week.